So this works. And time and again, we have seen how many of you fail to invest that energy, time, and money. Okay, so there's protests going on across the street. You may hear the honks of horns and the horns honking and the people shouting in protest against a certain unempathetic person who is taking a chainsaw to the way of life here in the United States. But that is not why we're here today. Today we're here to talk about comments that we've received on our channel here on YouTube from folks like you who got either a COVID EIDL, that's an economic injury disaster loan, during the pandemic 5 years ago, or you have applied for or want to apply for currently a disaster loan, either for physical damage or for economic injury. My business still has not recovered from COVID-19. First, I want to compliment Dana on her exceptionally excellent use of commas in this sentence. The writer grammar freak in me is very happy with that sentence. But I'm not happy with the fact that your business hasn't recovered yet, Dana, from the pandemic. Where do you go from here? The problem, essentially, is that a lot of small business owners took on debt that they didn't anticipate having to take on. And many of those small business owners, out of the 4 million loans that were generated during the pandemic under the COVID EIDL program, many of those small business owners had never taken on debt before. Sure, maybe the occasional loan from a family member to get the business started, or a loan from a retirement account and paying yourself back with interest to your retirement account to get a business started, or, as often happens, piggybacking a bunch of cash advances from credit cards to get the cash you need on hand. But many, many small business owners had never submitted a formal loan application to request a loan from a lender specifically for the working capital they needed to either start a business, grow a business, or maintain a business. And then COVID happens 5 years ago this month. And in fact, 5 years ago this week. And people find themselves thrust into a position not within their control to have to borrow money from the federal government. Money that came to these small businesses at a very low cost, 3.75% interest rate for a fixed rate term of 30 years. And the intention from the Small Business Administration was to provide a very low-cost lending experience and a long term for repayment to lower the monthly payments. Because the way we amortize or calculate monthly payments on a loan of any type can be, 5 years, 10 years, 7 years, in some cases, 15 years, 30 years. The longer the term, the lower the payment. And so the SBA presented this opportunity thanks to the COVID CARES Act passed by Congress that instructed the SBA and funded the SBA with this giant bucket of money to dump into the American economy as quickly as possible. And so these small business owners who had never formally applied for debt before, and even those who had, found themselves in a very difficult position of having to scramble and learn as they went with an already dysfunctional Small Business Administration, which those dysfunctions were just exponentially enhanced thanks to the panic state and the urgency of getting this money into the economy, and the urgency and anxiety of small business owners like you coming to the SBA and requesting those funds. And I think that issue of people never having borrowed money before, or if they had borrowed money before from a lender, whether it was an SBA-approved lender or just a local savings bank or a local commercial bank, they probably had the guidance of a lender, of a loan officer at the bank to at least provide some guidance. In my 30-year career as a mortgage banker, primarily dealing with first-time buyers. That was my specialty because that's who I was when I started in the business. I was somebody who wanted to achieve the American dream of buying a house, and I couldn't get answers to my questions. So I took a real estate class, and then I had an opportunity, and I got a job in the mortgage business, and the rest is 30 years of history. And I, as a loan officer, would guide my first-time buyers through the experience of buying the house and obtaining the mortgage. But a primary concern of mine as the loan officer, as a representative of the bank, was to say to my applicants, here's the monthly payment. Can you afford that? And I sat across the table like this from many hundreds of applicants, often couples, married or unmarried couples, heterosexual and homosexual lesbian couples, partners, life partners, domestic partners, and watched them turn to each other to discuss the monthly payment. During the pandemic, you all did not have that kind of guidance. We had several hundred clients who hired us to manage their application process, whether it was an original application or requesting reconsideration for an application that had been declined, because that's the SBA's process. You cannot reapply as much as the SBA will tell you. You need to ask the SBA to reconsider the declined application and to provide additional information while you think that decision of declination, of denial, should be overcome. And people who hired us to manage the various increases that happened. Originally, the loan was $150,000, then it went up to $500,000, and then it went up to $2 million. And so we saw people coming to us. But we worked with just a few hundred people. Here on YouTube, we gave advice. We know with over 10,000 subscribers that we helped thousands of people with our free instructional videos, with our live question and answer videos. And we tried to provide that kind of guidance that I, as a loan officer, used to give to my applicants who were buying homes, that Linda Ray used to give as an insurance agent to her clients who were coming to her to purchase insurance for their home, for their business, etc. Most small business owners did not have access to someone like me and Linda Ray. Try as we might, we tried to get the word out there that we were here. Yes, we were in business, a small business just like you, to earn revenue and earn a living, but we gave away through our charitable intentions, through our commitment to wanting to do our small part voluntarily to contribute to the small business community during a terrible crisis. And we gave away lots and lots of free information here on YouTube. And also we used to do at one point free 15-minute consultation calls. But many people, no matter how much we tried to extend our reach to you all in the audience, many people out of those 4 million loans did not have access to us or to other experts, and they had to write it on their own. Or actually worse than that, if they had to do it on their own, was if they had someone that they trusted as an advisor, a CPA, an accountant, an attorney, a business mentor, Reddit. Don't even get me started about that terrible cesspool of bad information. So most folks had to work on this on their own. That, I think, is the fundamental problem. Because in that panic state, in that anxiety-driven mindset, how did somebody like Dana, you can tell a lot from someone and how they use words and how they speak and how they write. I can also tell a lot about somebody from their credit report. That's a whole other issue. But Dana's sentence here tells me that this is somebody who is sober-minded in terms of her business. She takes the time to put the commas in place. I think that means she probably takes the time to approach her business with that same sense of care. And I would hazard a guess that maybe she didn't have access or had never borrowed money before, as I said at the outset of this video. So that primary element, I think, still carries forward 5 years later when folks like Dana are saying, my business is not recovered. We have another channel called Simple Sense for Small Business, where we set out years ago to discuss the boring, mundane basics of running a business, the stuff that is not glamorous, the stuff that we know that many of you avoid in the day-to-day operations of your business. I mean, really mundane, boring stuff. Click on the link so that you can jump over there. And if you wouldn't mind, please subscribe to that channel, especially if you are Dana. If you're watching this video, please subscribe to that channel and visit our playlists, because we have a lot of good information for you on how you can recover from the pandemic. In our interviews with thousands of small business owners since the early days of the pandemic, in both Linda Ray and my professional experience as salespeople. I mean, I was a mortgage banker, but essentially I sold money, right? I had to go out there every day and I had to look for business. I had to look for real estate agents or accountants or attorneys, civic groups of people who could refer people to me. You know, my business was primarily reputation-based and word-of-mouth based. Linda Ray, with the small insurance agency that she owned in a local community in New York, similarly went out there and went networking with business owners. We have decades of experience in marketing and sales. And in the many phone calls we've had with you folks over the years, we have identified probably the number one failure of small business owners, which I think is the second element as to why many other people have not yet recovered from the pandemic. And that failure is a failure to attend to marketing, to invest more time, more energy, and more money to marketing, to finding new prospects for your business. And the way you do that, first you have to sit down with a piece of paper and you have to identify what are the characteristics of your business. What is it you're selling? Do you believe in that product or that service? And then the second thing you have to do is you have to do a deep dive and look backwards at the customers or the clients that you've had over the years who were the best quality, the people who got you, who understood you. You know, like the line from the movie, I'm just a boy standing in front of a girl, or I'm just a girl standing in front of a boy. I don't know. I forget the exact quote. You know, people who got you at hello, people who understood your value, who appreciated the quality of the product or service you were providing, and for whom, in most cases, pricing was not a consideration. So you have to do a deep dive and look back at those and find, out of all of the customers and clients you've worked with, who those people are, and then write down a profile of who is the ideal prospect for you, the ideal customer, the person who comes to you, gets your value, doesn't harass you about price. I'm not saying people won't ask questions about price, won't want to know what's behind your pricing in terms of features, services, quality, and so forth. I'm talking about people who believe everything should be cheap or free and everything should be discounted. And mind you, I come from a business background where I worked for a giant retailer here in the New York, Connecticut, New Jersey region that kind of sort of created the whole concept of discount electronics, discount consumer electronics, a firm called Crazy Eddie way back in the 80s. But I digress. That ideal prospect is a key element of your marketing. And then once you know who that person is, then you can create messaging on whatever platform you're going to use. Word of mouth, social media, big ad in a local newspaper, a little box ad in your local penny saver. Do they still have penny savers these days? Whatever it takes. We have found time and time and time again that small business owners fail to invest the time, as I've just described, to understand their product or service, to understand their ideal prospect, and then third, to get out there and get the message out and expand their audience to increase the number of prospects. And that time includes spending the money necessary. We have seen the tax returns. We have seen the profit and loss statements. We have had the conversations. We have been an investor in a restaurant business. We have had the conversations with the owner of that restaurant about his failure to invest more time and energy and money in marketing. And in his case, contrary to our advice, because we were also his business consultant advisors, he spent $22,000 in one shot for some lifestyle magazine. And we kept telling him that for free with his iPhone, he could just do a video in his kitchen preparing that amazing scallop risotto and put that up on social media free of charge. That is, we believe, the second reason why so many businesses, the failure to increase marketing using these techniques that I've described. But we discussed this in greater detail over on Simple Sense for Small Business channel. Click on the link. In the meantime, if you find this video so far helpful in any way, please consider liking and subscribing to our channel. Hit the little bell for notifications. We don't publish a lot of videos, so you're not going to get a lot of notifications, but we hope that you believe the information is valuable enough that you want to be notified when we publish new videos. Please consider sharing this video with someone that you think might find it useful. I want to discuss two tools that we use in our marketing that maybe you would find useful. Before I describe them, I want you to all know that we're going to provide you with the links where you can access those tools. And if you purchase either of those tools, or both, hopefully, we will be paid an affiliate fee for your having purchased that service through our website, through our YouTube channel. In our marketing, we use a client relationship management system, or what's called a CRM, called ℬ𝒜𝒂𝒦𝒢ℛ𝒪𝒰𝒩𝒀. ℬ𝒑 manage our entire marketing face, to the world. Email marketing campaigns, SMS marketing campaigns, telemarketing campaigns, all of those features you can create and track the progress and track the results in HubSpot. My famous phrase from my mortgage career is, results are the only thing worth talking about. And HubSpot has helped us tremendously over the last 5 years to enhance our business marketing efforts and to make them much more effective, including communicating within our teams, which right now is just me and Linda Ray, we're the team. But during the pandemic, we had a couple of folks who worked with us. And so HubSpot was valuable in engaging where we could assign tasks, create notes, forward emails, and so forth. And it was all in a central location. And for each one of your client prospects, each one of your customers, you could see the progress and you can see what they've purchased so far. So we would highly recommend HubSpot if you are going to take our advice and invest the time and energy to upgrade your marketing experience so that you can recover your business from the COVID-19 pandemic. There is a free version of HubSpot, and if you use that, great, give it a shot. It is a small first step in helping you rebuild your business from the pandemic because marketing is where it's at. I don't know if you ever heard the story about people who used to go door to door selling things, vacuum cleaners, life insurance, Bibles, encyclopedias. I did that in my mortgage career. Every day I would go out on the street. I would make sales calls in person on real estate offices, on attorney offices, on accountant offices. Linda, in her small insurance business practice, she went out there and did in-person networking, shaking hands and kissing babies and handing out business cards. The only way to get people to come into your business, wherever you're located, brick and mortar, online, mail order. I saw an ad here on YouTube recently for a catalog for stamp collectors. There are all kinds of opportunities, and you have to think about that. And so, to summarize so far, the reason that we believe that people have not recovered from the pandemic and are having challenges with paying the loan, the COVID loan, number one, when they applied for the loan, they didn't have either the advice or the wherewithal to understand that this was a loan which would require repayment, and they would need to create a plan for how they were going to repay this loan. Not just a plan for surviving day to day during the pandemic, but a longer term plan, because these loans came with a deferred payment period, and the SBA ultimately extended that to 30 months, nearly 3 years. So you had a lot of time to consider that plan. But because of business owners' lack of experience with borrowing money, we believe that that is a primary issue why folks have failed to recover and are having challenges with this debt. But the second issue for failure to recover is marketing. The third reason why we believe people like Dana are not recovering from the pandemic and or having challenges repaying the loan comes down to a failure to face up to that moment of truth that we're all terrified of facing. The moment of truth where you have to say, that's it, I'm done, I'm finished, I can't go on like this. This is not sustainable. This is a very difficult conversation for you to have with yourself or with your business partners or with your advisors, whether they're accountants or attorneys or business networking advisors or your business mentor. These are very, very difficult conversations to have. They're an even more difficult conversation to have if you're in a committed relationship with a spouse or a domestic partner that each of you contribute to the household, or maybe your income manages the household. Very difficult conversation to have with yourself and with these people. But many of you need to have this conversation because many of you need to take a cold splash of water in the face and go, that's it. This must end. I cannot recover from this. This is not sustainable. I cannot overcome this challenge. By the way, this is exactly the reason why the bankruptcy laws exist here in the United States, to help you business owners to recover from a failed business. The IRS has rules around losing money on a business for 5 years because the IRS understands that it takes considerable time to get a business up and running. So at what point do you have that terrifying yet brutally honest conversation with yourself that it is time to shut it down? That is what you need to do. Because if you don't, you are just giving yourself more anxiety and stress every day. and you're running into these financial challenges, whether it is the SBA calling you and demanding payment, or other creditors, or your employees complaining that you're not paying them enough, or whatever it is. If your business isn't working, you need to get rid of it. If a car dies, you need to get rid of it. It happened to us recently, a little over a year ago. Our 5-year-old Zoom red Mazda, the engine failed. The car had a lot of mileage on it, but the engine failed, and the cost to rebuild the engine compared to investing in a new car, we got rid of the car, traded it in, they gave us a few bucks for it, applied that towards the purchase of a new car, and we moved on. When COVID happened 5 years ago this week, March 17th, St. Patrick's Day, big moment. First of all, that was the week here in Connecticut where we were told everything's locked down because of the pandemic. But some of you may not know, most of you probably don't know this about me, but I'm a musician. And I had a successful music business that I had built starting in 2017 here in Connecticut. And I had a practice that I built, a business I built. I played in restaurants and in bars, hotels, and in senior facilities, of which we have a lot of those here in Connecticut. Because I played classic rock cover songs, but also because I played Irish music, March of 2020 was the end of my business. In fact, St. Patrick's Day of 2020 was a big income source for me. 3 bookings in the day, and I would have made a considerable amount of revenue for my business. But while COVID may have shut that down, I had already decided back in November of 2019 that I was closing the business. I said to Linda Ray, I did not achieve my booking target, and thus I did not achieve my estimated revenue target for 2020. And so the bookings I have for 2020, I will honor, but 2020 is my last year with this business. That's why we always say to you in these videos, the advice that we give you is based upon our experiences of successes and results we've achieved or results we failed to achieve, our successes and failures, and we inform all of the advice and knowledge we share with you here and on our other channels, Simple Sense for Small Business, based upon our real-world experiences, both in our separate careers before we met and together as Aurora Consulting. I made the decision to close that business down. That is the conversation you need to have with yourself and, if necessary, with business partners, domestic partners, spouses, employees, whoever. You need to have that moment of truth, no matter how terrifying it is, because maybe you just need to shut it down and move on and do something else, or do the same thing but in a different way, in a different format. If you need to interact with the SBA for your COVID EIDL, whether you're changing address, selling assets, changing ownership, borrowing money from a bank and needing to do what's called subordination, any number of transactions that the loan agreement requires you to either get permission from the SBA or interact with the SBA, and you want to get our advice, click on the link and purchase our EIDL Resource Hub, which is our downloadable PDF guidebook that we've created in a way that is so easy to use. You have a question, you click on it, it takes you right to this section or the chapter or the form or the template. It has my special recipe templates of letters and emails I've used as recently as just a few days ago to communicate with the SBA, and access to a private playlist of instructional videos on every aspect of your interaction with the SBA. Thanks for tuning in. We'll see you again.